I'd like to just start by describing for our audience, if you wouldn't mind, since this isn't, the usual financial circles, that you might be used to being in, but those who aren't familiar with the markets, etc., exactly what an ETF is, and I'll let you describe it because I'm still a little bit of a newbie, even though I think I should say, with all fair disclosure, I do own some of your ETF, so thank you.
No, great. Well, thanks for having me on your show. First of all, I'm a fan, and I love the guests that you've had, and you got a great thing going on. Um,
Thank you.
so, so I'm the founder and CEO of MUSQ, which is pronounced music, and we are the first pure play music ETF, giving investors a front row seat to the global music industry. What is an ETF? An ETF is an exchange traded fund, um, and it tracks the performance of an index. In this case, it's the MUSQ index, and the MUSQ index is effectively a basket of securities across the entire music industry ecosystem. So we have companies in streaming, content and distribution, live music events and ticketing, equipment and technology, and satellite and radio. So the ETF tracks the performance of all those companies, and we have small cap, mid cap, and large cap companies in the fund.
Very cool. And just a quick, so the you have 45 holdings right now, and just a quick rundown of some of those names for our audience. So you've got Amazon in there, Apple is there, Alphabet, which is the Google parent company, Sony, Spotify, Universal. A lot of these are the big names. So, I guess, what do you look for when you're deciding on what to add to the portfolio? What's the discussion around who to include and what exactly, or how do you kind of strike that correct balance for yourselves?
Right. So first, MUSQ is a passively managed fund as opposed to an actively managed fund. And it has rules to determine its eligibility requirements. So all the companies in the fund have to generate more than 50% of their revenues from music, or they have to be a top five player in streaming and content and live music events and ticketing, equipment and tech, or satellite radio. So Apple, Amazon, and Google, right, are obviously not generating more than 50% of their revenues from music, but they are top five players in the streaming market. So I had to include them. So those are the eligibility requirements. So all the companies are market cap weighted in the fund. No single company can have a weight of greater than 7%. So Apple, Amazon, and Google can never be more individually than 7% of the fund. And all the constituents are market cap weighted, and no company can have a market cap less than $100 million in market cap, or it has to have average daily trading liquidity of $500,000 a day for the last 6 months. For existing constituents, there's actually a buffer, and that company market valuation can drop to 80 million, and they can have $200,000 to $500,000 a day of trading value, and then they'd have a half weight. But for all intents and purposes, no company can be smaller than 100 million, has to have $500,000 of trading value a day. And that creates a really nice cross section of companies, small cap, mid cap, and large cap companies. We've got all the companies you mentioned. We've got, including, in addition to that, we have 14 companies in South Korea. We have companies like Hybe, JYP, YG Plus, SM Entertainment. We have companies in Taiwan like HIM. We have companies like Avex in Japan and SME Entertainment. We've got companies across Western Europe like Believe, Click Digital in Great Britain, CTS Eventum, which is a Live Nation counterpart. So this fund is a really liquid and easy way for investors just to get access to the music industry. A lot of those foreign companies I mentioned, they're really hard to trade individually. You have to set up local custody accounts to trade them. So what this does is it gives an investor total exposure to all these companies. So today there are 45, and that could change. The fund gets rebalanced quarterly. For the most part, most of these positions are consistent. It's at the bottom end of the fund when those get rebalanced. Some new ones may come in, companies that may have been gone public through a SPAC, or companies which may have grown into the size that they're eligible for. But for the most part, a lot of the companies are the same. But we make it nice and easy for the investor to come in and trade out of this fund, of the ETF. Another, important point I mentioned is ETFs, unlike mutual funds, are much more tax advantageous. You're not taxed the way you are in a mutual fund. When in a mutual fund, when securities are sold, or when they appreciate in value value or when they're sold, you actually get taxed as a holder, even though you may not have liquidated your position. As an ETF, you won't be taxed like that. You won't have pass-through taxation in the ETF like you do in a mutual fund. You'll only pay gains on the ETF if you actually exit your position in the fund. So it's another reason why index funds have become so popular and why there's $10 trillion of money in index funds. But what I really wanted to do, Evan, was create a product that was really easy and convenient for investors, for music enthusiasts, for musicians, for artists, for producers, for writers. Like, people love music, but no one really knows how to invest in it. And this fund is performing very well. I mean, this month alone, we're up 6%. Over the last 3 months, we're up 10%. The index last year was right in line with the S&P. And so it's like, it's been back tested. It's a very solid fund, and it's giving investors exposure to the music industry.
And, why don't you just tell the audience a little bit about your background? Now, obviously, you have a wide understanding of the music industry. You and your team obviously go through carefully to pick, the whole point of an ETF, again, for our audience, is to have a really well-balanced, well-rounded basket of stocks that they can, invest in by just investing in one. So, why don't you tell everybody a little bit about your background and how that sort of impacts your role here at the ETF?
Yeah, so I've been in the music industry for the last 25 years. I've run a lot of public and private companies across music publishing, recorded music, live music events, ticketing. I was a music supervisor for many years. I also produced a few films. I produced Clive Davis's film, The Soundtrack of Our Lives, which you may have seen, which is a #1 music documentary on Netflix today. So I've done a lot of interesting things across the music industry. And I was going to start another publishing company about 2 years ago, and I looked, and there were so many publishing companies. I had no edge anymore. Honestly, I had a lot of edge 15 years ago when I started my first company, Evergreen, when we bought all the rights to Bill Monroe, to J.J. Cale.
Oh,
We owned all the rights to Nick Drake. I bought Death Row Records. We had tons of hip hop, we had everything from Bill Monroe to Death Row. We had tons of just hip hop, country. Liz Rose was one of my writers. She was Taylor Swift's first writer, so we used to publish Taylor Swift's first album. We had Seals and Crofts. I did a deal with Barbara Orbison. I used to publish Barbara. I brought the Roy Orbison catalog. I had a company called ICG based in Nashville. We did a lot of Christian music, a lot of faith-based music. Anyway, so I've been around publishing, recording music a long time, and I just really wanted to do something very different, and I really wanted to just give people access to music. And I realized how big music had become. There were so many companies that were public, and there were really just too many to know. How do you know to put your money in Universal, right? Why? Because Taylor Swift is signed to Republic, and that's like owned by Universal. What happened to John Mayer, who signed to Sony? What happened to, to Billie Eilish, who signed to, it's like there's like so many. Well, Billie Eilish is signed Interscope, but what happened to, Bruno Mars if he signed to Warner Brothers? How do you know? Or like the Barbie soundtrack, those are all like Warner acts, right? So like there's just too many companies out there. Then you have all the K-pop companies. So I just wanted to make this really easy for investors. You have a fund right now that gives you total diversification, total opportunity just to get exposure to music, and and the index is just performing very well. The stocks in this fund are performing very well. So I wanted to do something different, and anyway, and so we went public with this fund on July 7th, and we have almost $20 million in the fund in the last couple of months, and it's growing every day, and people reach out to me all the time like yourself, and they're just happy that it's there for them. There's so many artists and so many musicians and producers and writers that just love music. They love the music industry, but they don't know where to put their money. That's not their job is to write great songs. Their job is to record music, right? Like all the guests that you've had on your show. And so anyway, I did something for them, but I did something also for the more institutional investor or a pension fund or an endowment that wants access to music, because music is just too big to ignore today. It's got to be a part of your portfolio today. I mean, in some respects, it is already a little bit with Apple, Amazon, and Google, but you can't really get exposure to the music industry without buying all these other companies. And so that was the whole purpose and the genesis of MUSQ.
And of course, music people or fans of things just in general in the 21st century, they seem to be wanting to have a little bit more of a deeper connection with things. And I think that, and I'd imagine some of your thought behind this ETF is that, beyond buying the records and the CDs and beyond streaming and even just beyond being a musician, I think there's a passion for people to sort of find a way to be involved, and of course, our money is a great way to get involved in stuff that we're interested in. So I think this taps into a music fan as well, someone that just wants to go a little further and say, hey, I got a couple of bucks and I'm thinking about, I'd like to invest in something that I love, because everybody's taught to invest in, if you're going to invest, do it in something you understand a little bit about, and do it with something you're passionate or interested in. And so many people love music. So this is, I guess, a doorway into that world.
It is. And it's a good segue into like, so if let's say Taylor Swift, right? Like take as an example, Taylor or Beyonce, like if you think what they're doing is successful, right? She's a songwriter. She's signed to Universal. She did a tour with Live Nation. She's got merchandising deals with Sony. If this is a way to invest in that, to play all of that, and you do that across the board, right? So it's really a chance for a consumer or an investor to really capture kind of the revenues associated with a lot of what these big acts are doing. AI and blockchain is obviously a hot topic today, talked about a lot. We have 8 different companies in our fund, maybe 10 after in the next quarter, that are all around AI and blockchain, from Sonos to Roland to Yamaha to Focusrite to all these companies are producing all the tools and technologies for producers and songwriters and artists to sample music and create exciting new songs. And so we're capturing that innovation around AI and blockchain as well. So we really wanted to give exposure to every aspect of the industry.
What do you think someone might be surprised by about the financial background of the music industry? I mean, people understand, as you said, the Taylor Swift stuff. People have a knowledge of it probably now more than they ever have about sort of the goings-ons of how to run a tour and the money that's involved and the equipment and the impact that it has on the towns and communities that it visits. So people are a little savvier now probably about the nuts and bolts of the music industry than they were 25 years ago. But what do you think still might surprise someone about a financial aspect of the music industry that maybe the layperson doesn't necessarily understand, that maybe they can take advantage of by being an investor in this ETF?
Yeah, it's a great question. So music today is the most overlooked, undervalued, undermonetized media asset out there. And let's start there, okay? And that's not just me saying that. That's Goldman Sachs saying that. If you read the Music in the Air report, that's J.P. Morgan saying that, which is calling music the best content story in the industry today. Music is cheap compared to all the other media streaming services. So I don't know what you have at home, but whether it's Netflix or Disney or Hulu or HBO, you're paying almost double.
I got everything. With the kids, I got everything, David.
Right. So you're paying almost double what you're paying in music. So music's cheap. For $11 a month, you're getting access to close to 200 million songs. Disney, that gives you just access to Disney. You still don't have it. You have to subscribe separately to HBO. And if you have kids, they all want their own services. So you get it. So it adds up to 2, 3, or 4 times, what you're paying for music. So music's cheap. Music's undervalued. Right, we're just seeing that now with price hikes, which is having an enormous impact. Spotify blew through record earnings last quarter because they raised their prices by $1, by 10%, right? And so they now have 226 million paid subscribers. So streaming is growing. It's 87% of all consumption today. A lot of people don't really know that, right? It's growing at 12 to 14% a year and more in the emerging markets. So it's 4 times what the GDP is. So it's a great industry that's booming right now. The recorded business is growing at 10 to 12%. Okay. And the live music industry is growing at 15 to 20%. The music industry is up 10 times from COVID, right? So it was 2.3 billion at COVID, and it was close to 30 billion last year. And companies like Live Nation just doubled their output for double the shows for 2024. So streaming today, the industry is what people don't know is that the industry today, which is about $80 billion, right, between recorded music publishing and live music, is actually more than doubling to $170 billion by 2030. That's coming right out of the Goldman Sachs report. Paid subscribers are going from 500 million paid subscribers, which is where we are today, to 1.2 billion. Right. So that means incremental revenue across the board. All the labels get 70% of those revenues from these different streaming services, which trickle down to the artists. So if you're an artist, right, you should see, increased revenues from the growth of all these streaming services. And, tours are just, they're booming right now. And so the industry is really at a very big inflection point. And then you add AI and blockchain, and what that is doing, that's all about the digitization of music, right? So what some artists may know is that blockchain is changing everything, right? Because if you had a song on the radio before, for the last 50 years, you had to wait 9 to 12 months to get paid. Now, theoretically, you have a, one pay for one play opportunity, because everything is on a blockchain. So in a perfect universe, when your song gets performed, you can track it. You should be able to get paid for it. It's about the digitization of the industry. And so that's going to change just everything around administration, copyright administration, auditing. If you're a songwriter, you'll have tools now available to you to audit in real time how your music's doing. And then AI is giving artists all the tools that they need to create new music. It's revolutionizing productivity. It's game changing for creativity. They get access to stems to produce new music. And this is, by the way, just a general big windfall for the estates too, because it just creates more opportunity. So as long as we're in a universe now, because what are the risks, right? Let's just be honest. Like there's risks with AI. So clearly one is market saturation, right? Too many, there's like 125,000 songs being uploaded every day. So market saturation is a risk. Market piracy is a risk, right? So we know what happened. We saw what happened with the fake Weeknd and the fake Drakes. So, there are issues there. But as long as we're living in a world of consent and compensation, right, then this is a great opportunity and a windfall for estates, for owners of music to have they should be excited to have their music, repurposed and redistributed and sampled in a universe where they're getting paid for it. And there's an AI task force now that Lucian Grange, the CEO of Universal Music Group, is running. And so, but we got to let technology kind of move things forward here, because the opportunities in the future are just tremendous for everybody, for creators and for copyright owners. So these are some of the details. And if you follow me on LinkedIn or you follow me on Twitter or Instagram, I talk about all this stuff all the time. I have white papers that we've uploaded. You can go to our website at musqetf.com and you can download our white papers. And I've got tons of interviews and I talk about this stuff all the time. But that's what this fund is really designed to do. It's designed to capture all these exciting things that are happening in the industry. And if you follow me, you can, learn about parts of it that you may not be familiar with.
While streaming is king right now when it comes to media consumption, physical media is still fighting the good fight. And you can see I'm a lover of physical media behind me. I hope I don't look like too much of a dinosaur to your streaming world there. But it seems it's still 17.5% of the global recorded revenue, as I learned, I think, on your site. So vinyl has seen a huge resurgence, and CDs are also making a little bit of a play. So, how does physical manufacturing of media have a place in the ETF as well?
Yeah, for music enthusiasts, right, for melomaniacs, like vinyl's never going away. And as you pointed out, which the Luminate report also pointed out, vinyl's growing. It's growing around the world. Music enthusiasts like to listen to music. They like the quality of vinyl. So that's not going away. And it's probably going to go away, less quickly than CDs. I feel like vinyl has a certain depth to it that, consumers and audiophiles really like. It's also a collector's piece. It's artwork. I love the vinyl collection you have. So it's exciting to watch. While the digitization of music is growing, vinyls is still growing and people want to collect albums.
And are you aware of that Illuminate controversy there, where the certain indie stores were not being counted in the numbers of the? Did that come up on your radar? As I understand it, there's another there'll be another way to sort of count some of these indie sales of vinyl records and things like that to get more of an accurate picture of the records that are being sold, because I think some of the manufacturers in the industry feel like, hey, we're really producing a lot of stuff, and they want to make sure that the industry gets the credit that they deserve. Have you heard about that?
Yeah, this weekend I was actually down at the Village Revival, and I was actually talking to one of the owners about that this weekend. So that's an example of a mom and pop, yeah, that's been around for a long time, and they're probably not getting counted the way that they should.
Right, right, and it's important because it's real numbers, and so we'll see how that story plays out a little bit there. But let's say the directors of the ETF, who your team, your board, or whoever you have working on this, you want to move things around. You say you do this quarterly. You may want to change some allocations or drop some stocks and buy some new ones, and just like a person might in their personal retirement fund. But how does that kind of process go? How often? You probably want to be careful, because that's what investing is all about, right? You want to just leave things alone and let them do their thing, and I guess make
Yeah.
a decision.
Right.
But
Well, honestly, look, truthfully, like I said, this is a passively managed fund, so we have rules, and then the rules come into effect every quarter, and the product gets rebalanced. So if a company drops from 100 million to $50 million in market cap, it's not going to be on in the fund anymore. And conversely, if there's a new company that grew in market cap, above 100 million, then it would be included, assuming it had the daily trading requirements. So this is not an actively managed fund. I'm not. I've determined what the rules are for the eligibility requirements. We've captured the universe of all music companies. I wanted these companies to freely enter and exit the fund, and so that's honestly what's determining kind of what companies are coming in and out of the fund, if they're falling in market cap, or they actually have a negative momentum too. So one thing is that if there's a negative momentum score attached to it, let's say the company drops in market value by a certain amount, by a certain X%, then it may be taken off the index too. So
right.
and we do that to preserve like all the other weights. So it's a very balanced approach. And even if it did fall off or it fell down in market, it's such a small percentage because we have, close to 50 companies in the fund. So if you look on our website, we actually disclose the weights for each of the companies. So even if one of them, was down, it's not really enough to drag down the entire index. You actually have, a lot of diversification in our fund.
The ETF has been active for, well, just short of a year, right? June, July?
July 7th, we went public. Yeah, so
July
about
7th,
about
so
about almost 7 months. Mhm.
yeah, so you'll get ready. You'll get a nice cake ready in a few months. But what have you learned along the way? How do you feel? Do you have you had any sort of epiphanies during the last few months, or things that you've thought about a little differently after this first several 3 quarters of the ETF's life?
Yeah. So look, investors seem to really like it. I'm enjoying kind of being an evangelist about the space. I've educated myself tremendously about the overall industry. But it's just what's exciting to me is just the number of investors that didn't know about this product. And when they hear about it, they want to invest in it. Because music is just too big to ignore. There are a lot of great companies. We're really transparent. You're familiar with a lot of these names, but there are a lot of names that you're not familiar with, and the industry's growing. For all the things that I said, and you can also, for further research, you can go listen to Lisa Yang's interview with Tim Ingham at Music Business Worldwide, and you can go read the Goldman Sachs report, Music in the Air, and the Illuminate report, and the RIAA report, and you can see that the industry is growing the way it is, and you really want this in your portfolio. So when people become aware of that, they say, look, this should be 5 or 10% of my portfolio. You may have some of the holdings already, one or, a few of them, but you don't have
Individually.
you don't have all of these. And this is like, if you love music, I mean, and you see that it's such a big part. It's also, by the way, it's not correlated to the economy, right? So, people are still listening to music really when the market's up, when the market's down. It's something that, again, it's so cheap that people even times of COVID, it actually went up, right? People were actually subscribing to more music services and consuming more music across the board. And so it's not really correlated to the markets. It's a hedge against inflation. There are very few companies in our fund that actually are tied to, the macro economy. Where, maybe some of the radio stocks have an impact if advertising revenues shrink, but everything else is not correlated. So it's a really good hedge against inflation, which is why we're encouraging investors and RIAs that they should, provide some allocation in their portfolio, to MUSQ because it just a lot of the companies make sense. You want to own some of these companies in your portfolio. That's for sure.
Right.
Like we've seen, like with market turbulence and volatility, you can't just have like the Magnificent Seven in your portfolio. You need to have a balanced approach. And so we created a diversified portfolio. But anyway, the short answer to your question is simply that when people learn about this, they're just really excited to learn more. It's also fun, like adults like it, and they also want to educate their kids with it. So one of the things I found was adults and parents are actually buying shares of MUSQ for the IRAs for their kids because they actually enjoy talking to their kids at the dinner table about, hey, do you know you own shares in music? Hey, you know that song on the radio? Well, you own the technology that's streaming it, Sonos. You own the artist that you're listening to because that artist is signed to X label. They have a publishing company here. They have a tour that I'm taking you to see at MetLife Stadium in a couple of weeks. And like these are all the companies that are supporting that ecosystem. So it's a great way for kids to learn more about securities. It's a fun thing for them, but it's rewarding and it delivers and the
Right.
fun and the index delivers.
David, broadcast radio has been kind of having a tricky time lately. Odyssey just declared bankruptcy, as I'm sure you know. How does the fund react to news and trends like that? And do you, as far as disseminating like a show, or we could call it a radio show, and I'm very romantic about radio, FM radio and AM radio too, to some degree, and passionate about it. But you do see things changing. What's sort of the what's on the horizon as far as Spotify? These things are streaming, but people have to go in and choose. And now there are things like Pandora, things like that sort of the AI sort of chooses the music for you. But do you see anything coming on the horizon about a sort of a human way to? And of course, there's a Sirius satellite, which maybe I'm answering all my questions. But is there anything else that you see in your travels about sort of the future of what radio is when it's the best that it is?
Yeah. So first of all, we still support radio. We have Sirius Radio, if you pointed out. We have Town Square Media. We have iHeart Radio. So these are all big conglomerates of radio stations. The average person spends 2 to 4 hours a day in their car streaming some form of music, and they're utilizing and leaning on radio for news, for weather, whether they're driving to work, going home from work, driving to school, driving home from school. So the human experience is still there. It still connects. It's passive. It's free, right? From the sense that for the consumer, unless you're paying for the Sirius radio service, radio for the most part is still free. Right. And so it's not. We don't think radio is going away. So streaming is. It can be passive, but that disc jockey. I'm a disc jockey myself, by the way. I was a disc jockey, for many years at WEHM and under my name, David Summers. And I love radio. And I still talk about the importance of radio. So that's not going away anytime soon. So we're still going to include those companies in our fund. And it's still the cheapest form of entertainment. And it's ubiquitous, too. It's around the world. So, it's not going anywhere.
Right. The familiar narrative, of course, is that artists don't receive enough royalties from their streams. And as we said before, streaming now accounts for 67% of the industry's earnings, or is probably a higher number since we're
87%. Yeah.
Yeah, a little higher than what I have. But obviously the goal of any ETF is to grow in value. So how do you gauge the concerns about that against, the streaming payouts to the artists? How does that come into your conversations with
Okay, well, there's a few different variables here. First of all, the payouts are determined between the labels and the artists. Okay, So remember that 70% of these revenues go to the labels, and then the labels take all that data from Spotify or Apple, Amazon or Google or Live One or Click Digital, and they then, it's distributed according to the number of plays, right?
Okay.
And the rate that they pay to those artists can vary, by the way. So there are different rates. Drake has a different rate than, somebody else signed to Universal, right? So, suffice to say that as the streaming companies are growing, which they are, because it's going to 1.2 billion paid subscribers. We know that, and we know that consumers are going to be paying more, right? They already paid 10% more 3 months ago, and they're going to raise rates again. So that pool of revenue today of the whole streaming market, right, is going to be paying out more to the labels, and the labels are going to be paying out more to the artists and the songwriters. But the royalty rates are something. Look, there are guilds like the National Music Publishers Association of America and the RIAA, the Recording Industry Association of America, that are representing a lot of these artists and songwriters and producers in their quest for higher rates.
Right.
And so that's an ongoing. So there's a pool of money out there that's growing. We know that. We know it's people are paying more, and we know the money is trickling down to the labels and publishers. And I hope that the artists and the songwriters and producers get their fair share. I mean, the same thing happened just 2 months ago with all the actors and all
Right.
the directors, right?
Right.
So you've got more ways that music is being used, just like you have movies and content that's being distributed. And then in the area of AI and blockchain, we want to make sure, like I said earlier, that they're getting compensated. So, but the industry is growing. People are consuming music more. There's more, there's 8 billion people on the planet, Evan. 7.2 billion people have cell phones, okay? Less than
Right.
10% are actually have a paid streaming service. So I have to believe that, the number should be closer to 50% of all mobile phone users in the universe should have a paid streaming service. Right? I don't know anybody, first of all, that has a mobile phone that doesn't use mute that doesn't access music in some way.
Right.
So I believe that there's a lot of growth ahead just with mobile phone adoption. That's why I say it's completely under monetized today. So right now, we're really at an inflection point with the growth of music around streaming, the growth of revenues around content to the publishers, to the record companies, and so it's an exciting time. And then you have live music.
You've had such a long career in the music industry, and you've been involved in so many different facets of it, from DJ to publishing. As you look at the industry, what do you and this is just a personal question, and of course you don't want to single out any particular business that you have in the ETF, but what part of the industry is very exciting to you? Like what really gets you, gets your attention, or that you're really excited to see growing or changing or morphing into something here in the 21st century?
Well, first of all, I'm like a musician. Okay. So I'm like a songwriter at heart. So
Right.
I love writing songs. When I hear great songs, whether it's, Zach Bryan or Morgan Wallen or Jeff Tweedy, when I hear like a new song written, that excites me. So the creation of music, following great songwriters, like that really motivates me. And then, seeing them perform those songs and ultimately, hopefully getting some awards for them and seeing them on tour. I love new music. I love hearing great new music. I love discovering new music. I mean, yeah, all the stuff around AI and blockchain, the business of all that is exciting to me. But the real excitement to me is just in the creation of music, hearing a beautiful new song that was written by somebody, discovering them, and then going to see them live, and then buying their record, and just listening to them. And I love music. I love seeing live shows. I just love discovering new bands. I love going down to Nashville. I love the business of it, obviously, but I love the whole creative aspect of it too. My life is music. I spent my whole life around writers, around producers, around artists, and I just feel like it's such an amazing It's food for the soul, and that's really why I do it. This is a great product, obviously, and it's great for investors, but I'm also doing it because I just love being around music.
It's interesting just with your publishing background. I would ask, there's this move that so many artists are selling their catalogs, and many artists have done this at differing values. And I guess some other artists, I'm sure, are lined up. You probably have an idea of what artists are getting ready to go public, so to speak, with their catalogs. But how does that impact the industry, and does that impact your ETF in any way? When a Bruce Springsteen says, "Hey, here you go, everybody. I'm selling my stuff," and how does that sort of? It's a new trend, so I'm just curious from a financial point of view, from the industry financial point of view, how that sort of reverberates.
Yeah. So look, I've been a publisher, as you know, for a long time. I've been buying publishing catalogs for a long time. When I read about that, it just tells me investors are even more excited to own music, right? Because they're getting really great returns in music. They're getting double-digit returns without like the volatility of like equity markets. So when Bruce sells his catalog for $500 million, that just tells me investors value, you know, the music so high, whether it's Dylan or Tom Petty or Neil Young. From my point of view, like our fund has all of those companies that are, investing in them, whether it's Warner Music, that's Warner Chappell, Universal Music Publisher. We have also all the royalty trusts from Hypnosis to Reservoir, right? So we're actually a part of that play. So, not with we're not invested in like some of the private equity funds that may be acquiring them, but certainly any public entity, any music entity that's acquiring them. And Bruce was, that catalog was bought by Sony, and Hypnosis is public, and Universal's obviously buying tons of music, so you get that through our fund. But look, when I read that, I'm just like, I can't believe it, but I can, right? Because the investors have all discounted the forecast based on all the numbers I shared with you on the show today, from streaming to recorded music to publishing. So they have an estimate on what those income streams are going to do organically, even before they market those songs to movies and so on. So it's all been baked into the price. So when I read that, I just know we're in the right place. Yeah, and so I know that investors are clamoring for it, and so this is just a completely liquid way for people to invest in it now.
Yeah, is it almost too early? Is it almost too early for these acts to be selling these, even though the numbers seem so large when they sell these large catalogs? Listening to your thoughts and the thoughts and reacting to some of those Goldman Sachs statistics, could it really be a little too early for some of these catalogs?
Yeah, well, you know what? We don't live forever, so I don't know what too early means.
That's true.
So at some point they want to enjoy. Bruce has had an amazing career. He's had to work really hard, obviously. And so at some point, he's got 3 kids, he's got a farm, like he wants to enjoy his money, So,
Right.
so I think, and a lot of these artists you're getting older, but it could be motivated by taxation too. Capital gains rates maybe going up under a certain administration. There are a number of reasons around estate planning, and you don't know what's going through. A manager may have been with the artist for a long time, finally would like to get some money too.
Right.
And so but look, it'd be great if we could all hang on to our possessions forever. And, but at some point, I think like there's a price on the table, and there's just certain realistic demands that we all need money to live, and we have families to feed and support. And again, economically, it may be the right time, look it probably was, by the way. Look, interest rates were really cheap when a lot of these big catalogs sold, the ones you're talking about, whether it's Paul Simon, Bruce, or Petty, or Neil Young, or Justin Bieber, like all these, rates were cheap, or rates it was like 2 to 4% money, right? So I don't think those catalogs would sell necessarily at those prices today, with rates being double where they are, right? So they probably made a pretty good decision when rates were that cheap.
Right.
The funds that were buying them, they could borrow money that cheap. So I don't know if Bruce's catalog would sell for $500 million today. So I think it was probably timed pretty well.
A wise choice. Well, David, this has been a really fun conversation about a little bit of a mysterious side of the music industry, the financial side. And so thanks for sharing the information about the ETF with us. And if I don't talk to you before your 1 year anniversary, happy birthday to the ETF. And thanks so much for your time.
Thanks, Evan. Thanks for having me on your show today.